Good morning, everyone, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Wednesday, January 18th. We're about to get the release of U.S. CPI numbers for the month of December, coming in right in line with expectations here, month-on-month 0.3%, core month-on-month at 0.2%. Also seeing that we saw an uptick here in core year-on-year from 2.1 to 2.2%. That's a positive development. Real average weekly earnings and hourly earnings, slight downtick in weekly earnings and a hold on average hourly earnings. So a pretty decent print overall. Likely see a little bit of a bump higher here in the greenback on the release. Keep in mind the real inflation numbers that you want to put more weight on are the is the PCE ratio, the personal consumption expenditure, which is a little bit deeper of a gauge. But certainly this is a positive development here for the Fed. As we look at Fed fund futures for expectations on interest rates, they're pretty well solidified still at June. So you can see that the June here probability of a hike is still at 67%. That's where we started the year, and it largely has us expecting a hike in the second half of 2017. Interesting uptick in that core read, and again, one of the more important reads on today's release is going to be that core and the average hourly earnings. Okay, so that's the data release for 8:30, guys. We do have some stuff still on tap. Obviously, the Bank of Canada interest rate decision is released at 10 o'clock. We're expecting them to largely hold. We'll see if there's any commentary accompanying that. We do get the monetary policy report as well with this interest rate decision. A little bit deeper of a look, but not really expecting any fireworks on the BOC. We'll go over for today. Obviously, we'll take a look at the DXY, which is on its way with that rebound we were warning of early in the week. We'll take a look at the pound, euro pound, dollar CAD ahead of the BOC. Take a quick peek at Aussie Kiwi. I know we were talking about it here in the webinar yesterday. I think someone brought it up. So I do want to give you an update on that, which continued to move lower yesterday. Our commodities, gold, nat gas for you, Conwall, and copper. I got them both. Dollar yen we want to touch base on, as well as Aussie yen. Juan wants to take a look at dollar ZAR. I don't really track dollar ZAR. I'm not going to lie to you. If we have time, I'll bring it up. Let me jot it down. Kiwi CAD, you take a look at. Or choose the best one. Okay, I got you on. And Euro Oz, we've been following that one, so I can give you a quick update on that, no problem. Okay, any other questions, trade setups? As always, guys, feel free at any time to drop them on the message board. So let's start off real quick with the U.S. dollar, where this leaves us heading into the U.S. session. I do want to go over the sterling from yesterday, obviously, and the results of the claimant count. It was a mixed print. The headline number was actually pretty decent. Change in employment was a little higher than expected, but certainly, we did see that the wage growth numbers were the highest that we've seen since September of 2015, so it's a pretty decent read, and we'll go over that in a moment. First things first, here's what the greenback looks like heading into the U.S. Open. So the dollar, we talked about this yesterday, confluence support at 100, I think it was spot 73 to be precise, that swing low that we made back on the 14th last month. Secondary target was this 100% extension, 2 equal legs down, gave us 100 spot 43, and we did close below it. Here's the rebound. This is the first area of resistance you would want to see if this is going to be a more legitimate break. Inevitably, we're targeting that swing high, or I guess this is going to be the January high day close at 99.53. We're targeting this parallel here, and we're targeting that 100-day moving average. So basically, your downside levels are like here. On this rebound, though, this is your first area of resistance. I'll show you the intraday chart in a moment. Bearish invalidation, unfortunately, still needs to be up at 101.80. I know it's a far away from where we are right now, but that's really the region I'd still feel comfortable with. You have the median line there. That would necessitate a break of the weekly opening range high, which would be another objective bullish formation. But I do think you could get a little bit more upswing on this rebound. Remember, momentum kind of rebounded right off that 40 mark, or just below. So you could get a little bit more of a sort of snapback here. Ultimately, you still want to sell. Here's what the dollar index looks like on the intraday. So 4-hour chart, Okay, I was looking for signs of divergence. Here's what the 2-hour looks like. You came from real oversold territory. So like I said, maybe a little bit more of an upswing, but this is your first area of resistance, former slope support on the downtrend, former slope support on the uptrend. Both of those converge right here. With, again, your bearish invalidation level still has to be up at 101.80, 101.90. The median line, again, your weekly opening range high comes in just ahead of that. I'll also be looking for the weekly open, this 618, 101.12 into 101.19, another area of exhaustion. So basically, long story short, guys, looking for an upswing or a stretch high or an exhaustion swing here for the index. If we clear the weekly open, stand pat, a break above this basically shifts you right back up to the upside again. So I'm hesitant to take a real strong stance on the dollar itself. Now the dollar crosses, interestingly enough, are sort of doing their own thing. So some dollar crosses actually look like you want to favor a little bit more dollar strength in the near term, others weakness. But as far as the index is concerned, again, very heavily weighted the euro. Keep that in mind, 60% almost. Looks like it could get a little bit more of a swing higher before we start to break down again. What else can we say about this index? Bear with me one sec, guys. I just want to see what this looks like. Okay. So watch that trigger there. And I don't want to necessarily stress this 618 anymore, so I'm going to kind of ditch that for now. So look for resistance into the U.S. Open here. If we clear 101, the weekly open comes in at 101.20, and again, I'd be looking for exhaustion, possible entries back on the short side on a stretch into the weekly opening range highs. Any questions on the dollar index? Obviously, downside targets remain unchanged, guys. Continuation lower from here if this holds. A move sub 100 spot 37, you're looking at 99.93, you're looking at 99.95, and again, that January high day close on the daily chart starts to converge pretty closely with that slope, just lower. Okay, that's the dollar index number one. Let's jump into the British pound. Here's what sterling looks like to open up the trade session. So the warning we gave yesterday kind of panned out with the reversal that we're seeing off of confluence resistance. Here's what the numbers were supposed to look like. Okay, here's what the expectations were for UK data. Here's what they actually came out looking like. So it was a decent print in that the claimant count came in at 2.3% as expected. Jobless claim change, so you want this number to be negative. The more negative, the better, was stronger than expected. We were expecting to see 5,000 new jobless claims. We saw a contraction of 10,000 and a downward revision to the previous month. Okay, where it gets a little dicey is this: decent average weekly earnings. That's a nice uptick to 2.8%. 2.8%, as I said, are the fastest or highest wage growth numbers since September of 2015. I actually had to go back in the data and look at that. So it's been a while since we've seen wage growth at this level. Keep in mind, all these central banks, as a just underlying theme, are trying to stoke inflation. So wage growth in, figures, inflation figures, these underlying roots of inflation are always going to be metrics that the central bank is watching. The ILO unemployment rate held at 4.8%. Slight bump here, okay? Employment change, we were looking for a contraction of 35,000. We still got a contraction, but certainly better than expected. So mixed data, but broadly speaking, I would say this is pretty supportive. Now you're probably saying, well, Mike, if it was supportive data, then why the hell is the sterling, is cable off so sharply today? And that's how we always go back to the same exact stuff, guys. As traders, the data is not going to always have an impact that you would think on the near-term immediate price action. The long story and the short of it was, as I was noting in yesterday's piece, this thing was vulnerable into resistance. And sometimes these releases are just the triggers you need to be able to sort of fuel the next move, whether it's in favor or against the currency. So not to bash the fundy, guys, but obviously you saw the data come in sort of mixed, but broadly supportive with nice wage inflation numbers. Again, a major metric that these central banks are watching. What did that mean for the pound? Well, here's what the pound looked like yesterday. And we noted basically that 124.33, the 2016 high day close, the 50% retracement, 123.81, critical region of resistance. Now, you also had the median line, the upper median line parallel, which converged right on that region. If you take a parallel of that slope and extend it off the high from December, it actually comes in almost perfect. I'll show you in a moment with where we just peaked out. So the long and short of it, sterling has set a very nice and tidy monthly opening range, just above support. Again, I'm going to favor looking for more of a concerted breakout here, but on the near term, we're looking for this pullback to offer re-entry on the long side. I want to also bring your attention, yesterday here in the webinar, we talked at length about divergence and really being able to identify divergence a little bit more clearly. Here's a perfect example of divergence that has materialized into a nice rebound. Okay, price action making a lower low, the oscillator making a higher low, trigger break to the upside. Look for this swing on the downside in RSI to find support at former resistance. And hopefully that'll give us that pullback near 2177, 2180, where we're looking for entries on the long side for the pound. Here's what the intraday chart looks like. And here's what we look like yesterday. Okay, so there's that 2381, 2433, critical area of resistance, 2016 low day close, the 50% retracement, the upper parallel. Again, if you take this same slope, I'm just going to take a parallel off that high from December, comes in pretty darn close, again, to where we capped out here in pound dollar. So now that we've made this turn, now that we've made a concerted break below 70, your first sort of instinct should be tack on a quick retracement. Let's see what are some basic downside targets we'd want to be mindful of. First things first, your 618 and 50%, sort of the first go-tos that I'll look at. Let's see where the 38.2 comes in. Anything meaningful there at the 38.2? Okay, you can see a decent pivot there in price. If you look at my cursor to the left here, not bad. So we'll leave that on there for now as initial target, 122.52. If you're holding any shorts, an area of which you might want to start cleaning up a little bit of that level. 121.77, or I should adjust this, sorry about that. 121.80 is the close on Friday. Okay, so that's sort of the level that converges around the median line right now, and that's the level I marked last night, guys, as sort of an entry or a level of which we're interested for possible re-entry on the long side. So keep your eye on this pullback here. Forgot to bold it. I was looking for it right there. For possible area of re-entry on the long side for the pound. If we get the dollar stretching a little higher, which is what we're looking for into U.S. trade, might be an area of interest for possible re-entry. As far as UK data is concerned, you still do have some event risk later in the week, okay? Back as we head into Friday, you get those retail sales figures from December as well. Not expected to be a very cheery print. So we'll keep those figures in focus as we head into the close of the week for the pound. Any question on pound dollar? Nice reversal. Took another hour or so after we wrote this for it to reverse, but the break back below 123.80 certainly set this thing back on course. So immediate risk lower, looking for that low to offer some opportunities to get back on the long side. Okay, that was pound dollar. Number 2, euro pound from yesterday. Look like this. So the euro pound, the grandpa trade, I like to call it, because it typically takes forever to move on everything. But we've been tracking this one for a couple of weeks, and looks like we finally paid off. 88.15 into 88.22, key region of resistance. We did probe just above it. We talked about that early in the week on Monday, right after Martin Luther King, citing that being really the make or break level here for euro pound. Obviously, the break of near-term support really put this thing on the go with the break below 87.64, and we've been moving lower ever since. Now, the rebound that we made off of this 50 line, little messy last night on the near-term slope. I'll show you in a moment, just off of this ascent. This is the daily chart. Has me looking for a re-entry possibly near 87.16, 87.18 if we can get up there. The high was 87.05, I think, in overnight trade. So if we can get back into this region, it might be an opportunity to get back on the short side. A really good way, in my humble opinion, guys, on the pullback to try to play sterling strength as opposed to trying to necessarily fight the dollar, which could be on a little bit of a rebound here. So something to keep in mind as far as euro pound is concerned. Daily chart's pretty clean now. Okay, near-term resistance and near-term bearish invalidation, you want to shift back up to 87.40. Here's what it looks like on the intraday. And here's what we looked like last night. So there's that 50 line. Like I said, little messy, kind of dribbled below it, popped right back through, looking for entry just higher from where we maxed out here. If we do get a pop, I'm going to look for short triggers on near-term trade, see if we can't get a move lower off that region. Ultimately, 85.91 is sort of where I want to see this. 85.91 would be defined by the 50% retracement of the advance and exact slope support. This would be like too clean, but if we get a move down to here, that's ultimately where I'd want to see a little bit more of a stringent support. Also, look back in price, really nice pivots here. Support, support, resistance, it's your 50% retracement. So another way or another opportunity to express pound strength without necessarily getting too feisty here on the dollar short. Euro pound questions. Number 3. Okay, also from last night, dollar CAD. So the BOC's on tap. Here's what dollar CAD looks like on the daily chart first. Okay, so this is the same daily chart we've been following for a very long time in the pound, or excuse me, in dollar CAD. If you guys remember, we talked about this last week as we came and made a perfect pitch right off of the lower median line parallel. That rally found resistance at former parallel support, now resistance. That outside day reversal off of resistance found support once again at that parallel. We're ping-ponging right here between former support and current operative downslope support. So that's the range to respect right now. I know it doesn't give you much confidence, but that's the only thing you need to focus on right now. I do think you inevitably get a break, and I am looking lower. And in fact, on this rally, I would like to find an area to get back on the short side to stop against the weekly opening range highs. The first area of interest we've already passed. Second area of interest is sort of right around here, 3150s or so. But there's a couple of things that have me concerned. A, this I consider divergence. Okay. Price action making a series of equal, or excuse me, the oscillator making a series of equal highs or lows and or slight higher lows. Okay, if I put my cursor right there, you can see that these two subsequent lows are in fact slightly higher, if not equal. But in price action, well, that's just simply not the case. Okay, a much more dramatic drop. Again, bring it into a line chart to recognize it a little clearer. Much steeper lows. Remember that we're always looking for the oscillator to not confirm an extreme in price. It doesn't matter that this makes a higher low or a lower high. It's what matters that price made a new extreme and this did not. So certainly at this point, it's vulnerable for a rebound. So for me, while I like the break of support, test as resistance, move lower, momentum saying hold up one sec. We want to be a little bit more cautious. Raf, I completely agree with you. He says dollar CAD, could that be a double top? Well, the break of this low and certainly yesterday's close, in my mind, would, yes, validate a double top formation. A weekly close would be a little bit more convincing on such a longer, broader prospect trade. But yeah, Raf, from a textbook technical analysis, standpoint, you would be looking for this to be a measured move of that double top formation. And if you do that, just to put things in perspective, a little drill here. He says juicy. Yes, it could be a very juicy trade. I agree. If we just put things in perspective here, the measured move on such a formation break is way down here, 125.60. So the implications of a move and break sub 30, as I noted in yesterday's report, the move 29.60, that would be the free fall move. If we clear that, I think you see a lot more dramatic downside for dollar CAD, but this is pretty big. So what do you mean by all this, Mike? Are you bearish or not? Look, I think the rebound can get a little bit more juice to the upside. I think you look to sell that rebound while below the weekly opening range high. I think you need to wait and focus on this break sub 30, close sub 29.60 to get this thing going. On the near-term approach, as we're focus is here, here's what I'm looking at. And here's what dollar CAD looked like yesterday. Again, daily chart just highlighting the fact that we're back at that support. The 4-hour chart highlighting, okay, the fact that we saw another perfect tag of that key level with bearish invalidation, near-term resistance, initially at the weekly open, 131.35. 131.55 would be a basic 236 and converges on all these median lines here. So an area of interest for me, okay, for sure. And that would be a tight stop against the weekly opening range high and just let it go. If it clears the opening range high for the week, I do not want to get cute, okay, trying to chase this higher. 32.40, 33.08 would be levels of interest to look for some resistance. But that really would shift sort of the near-term focus if we do see a move through the opening range high for the week. So just keep that in mind, guys. This is sort of where we want to see resistance start to show its face on the dollar CAD. Any questions on Loonie? Again, here's what the 120-minute chart looked like yesterday. Here's what it looks like right now. Seen that slight rebound. See if we can't get this stretch going a little higher to get back entry on the short side. Dollar CAD number 4. Any questions? BOC is on tap. Again, that comes at 10 o'clock Eastern here in New York. No major change expected. Okay, next up on the list is Aussie Kiwi. Here's what Aussie Kiwi looks like, number 5. So remind me here in the room, if you were here yesterday, who was asking about Aussie Kiwi? You kind of got my interest going. We highlighted it early in the week as we were coming into a major resistance level yet again. That level was defined by 105.48, 105.40. Key region, you had your January low for the opening range low of 2016. You had a 50% retracement from the October highs, and certainly, again, long-term parallel resistance at this point, upper median line parallel for downslope. It all lined up right there. And we sat there for nearly a week before this thing finally made a move, and on the pullback lower, you're coming off of initial support right now. Here's what it looks like in the intraday chart. A lot of back and forth. I can't say it's my favorite setup, but the general trade continued to work out pretty well. Again, if you remember back on the 11th, here's what we were looking at on Aussie Kiwi as we were just sitting here, stuck below this 50% retracement at 105.60. And it spent some time there. It was really the break below 105.18 that we needed to get this thing going. You slobbered below it a little bit back on Friday, but you did close below that level. The gap higher, or the move higher into the U.S. Open for this week, maxing out right at that upper parallel yet again. So on this rebound, looking for resistance, initial area is 105.18 again. Near-term bearish invalidation, I'm going to bring down to 105.25, just slightly lower from 105.60 earlier in the week. That's the weekly open, basic trendline resistance, and those swing highs from last week. So I still think Aussie Kiwi moves lower. I think that risk still remains well below the weekly open at 105.25. ultimately, areas of interest for possible re-entry or possible recovery here to the upside isn't until 104.37 and the lower parallel, which currently comes in somewhere around 104.10. So an area of interest down here of where I'd start to want to look back on the long side. But this formation seems pretty decent. Nice plays. Anything here? I might leave it there. Can't hurt. So look for an exhaustion high. Look for a push, one last thrust here into the U.S. trade session. Look for resistance on a stretch into 105.18, 105.25. Hey Juan, that was for you, right? Okay, cool. Yeah, so Aussie Kiwi, keep an eye on it. It panned out pretty well. Look, you got a resistance trigger break here yesterday, which again we had highlighted on the report. If I can hit back here. And that pop higher again gives us a little bit more of a near-term pause on this rally, but ultimately looking for exhaustion here to get back on the short side. Not bad. By the way, I was getting some questions earlier about the inauguration on Friday and how that's going to impact intraday trade. I don't even have a response for that, guys. I mean, barring, God forbid, any type of catastrophe or things of this nature, it's you kind of just want to take it as it goes. I don't think you're necessarily going to be a market impact because of the inauguration. So trying to plan a strategy around that event, I don't think is going to suit us in any reasonable way. Okay, Aussie Key. I want to take a quick segue into gold. Okay, and then we'll go into nat gas, copper, and jump into some of the yen crosses that we want to take a look at. Kiwi CAD and Euro Oz I got on tap for you as well. Juan, don't forget. Gold. I wrote a special piece on Daily Effects about this yesterday. If you didn't see it, don't worry because it's the same charts and even better, more detailed charts here on this on the setup that we posted last week. Look, 1218. We talked about this yesterday, 1219, huge region of resistance. I don't want to beat a dead horse. We talked about it in the webinar at length. 38.2 retracement, operative downslope median line, 1, 2, 3. It's the exact bisector. Former lower median line parallel, support break, now resistance, and you have momentum at 70. It's screaming resistance. It's screaming, watch out. If you're holding long exposure, we've had now 1, 2, 3, 4, 5, 6, 7 days of consecutive advances here in gold. Let's see the last time that we saw. Okay, no extremes on that. I just want to see if there's an extreme on that move yesterday. Okay, so here's the last time we saw a single day advance as much as we did yesterday. It was actually back here, back on the 5th. And you saw that single day advance, which was slightly higher than what we saw yesterday, did see a one-day pullback off resistance before trying to make another run. So that's exactly where we are, where we were yesterday. And I do think that you could get a little bit of a pullback. Juan says, would you short there or rather wait to get long again? Juan, which trade are you on right now? I'm not sure if this was a comment I missed earlier or if this on gold. Gold. So I would be short now. Unfortunately, I'm not short right now. I didn't get into the position yesterday. I spent the whole day writing that report and I never got in. But yes, I would want to be short right now. I'd have a stop just above 1218 or the highs that we made. And I'll show you the near-term chart in a moment. You don't want to get too aggressive, right? Because you're essentially trying to call a near-term low in the dollar. And while I don't want to necessarily do that, this is such a critical region of resistance. Let's take this back real quick. This is what the weekly chart looks like for gold. Okay, let's just keep a broader picture of where we are in scope. This is, again, a couple years price action going back to the 2013 lows. If we take a look at this large median line formation, this is the 2013 low, 2013 swing high for August and the subsequent low we made in 2015. Okay? If we take a look at that, that same slope is what these red lines are. Has called so many turns in price. Okay? So the 50 line is a faint blue line here. Let me make that a little bit darker for you to see. Whoop, wrong one. Okay, the 50 line that you see right here, that converges on the 38.2 and the broader 50% retracement of the entire advance off the lows. That same, take a step back, basic trendline resistance off of the record highs in 2011, same slope, called the slope off the highs from last year. Caught the lows last year, and that same slope extended off that swing low that we made back in October, converges on that same region. Long story short, guys, I don't want to beat this up, but this week's close is paramount, and the long side is vulnerable near term, sub 12.18, 12.19, any way you slice it. Even if we probe through it intraday, you still have these median lines to contend with. Okay, that's 12.20 and as high as 12.28. Still levels of which I'd be very cautious. It caught the exact low here, caught a pretty nice low there. It was the exact low that we made here, all along the same plane. So watch gold price action. It could get treacherous. Put a gun to my head, I would say be short, be very nimble on the short. This is just intraday. Ultimately, we do want to get long, okay? But near term, I do think you're at risk for a pullback here in gold prices on the near term. Also keep in mind on the weekly basis, watch this momentum trigger. If the weekly candle, remember, on the weekly chart, nothing matters in any oscillator until the candle closes. So on a weekly basis, if we do close above this, it would only further validate the fact that gold may in fact be making a more significant reversal off of the lows that we made in 2015. So this is the weekly chart. Again, the daily chart giving us a little bit more pause on intraday price action with a lot more confluence at that same region. Momentum on the daily chart at resistance. Here's what the intraday looks like. This is the 120 minute. It's a 4 hour. I don't want to stress this slope. I mean, this slope we held for 4 weeks almost, but I do want to just show you that upper median line parallel, we've been basically riding it as support. Targets that we talked about yesterday haven't changed. Whoop. Near term, 1203 on a downside break into 1205. And then again, a basic 236 would take you to 1196. I don't want to stress this slope again, but in the meantime, I am going to just keep it sort of on the radar. Here's a 2 hour. And once we get a little structure to the decline, I think we'll have a little bit more of an idea what kind of slope we're working with as far as the pullback, what severity of the decline we should be expecting to see. But right now, I just want to note that it's vulnerable. Don't put it past this thing to make another stab into the key region because we actually never really hit 1218. Remember, the actual high, actually we did, 1218.75. 1218.97 is where the 38.2 comes in. But long story short, don't be surprised to see one more spike, but I would be looking for exhaustion on that move. Looking for support for a long around 1180 or even lower. So Theo, on gold, if we do get a pullback, like I said, 1196 would be an area of which I'd just start to look for initial support. 236, maybe one of these parallels, catch it. But on the broader sense, 1182 is the near-term bullish invalidation level. So yeah, 1180 to 1182, Theo, I would agree with you on that. If we go back below that, you see that red line? You see that pivot? Resistance. Resistance, break, support, support. Once we broke below it, it was sayonara. Once we broke above it, it was a nice rally. Don't want it to go back below that again. If this is mounting a more concerted rally off the low, that's really where the pullback should find ultimate support. So does that make sense, Theo? Heading into 1180, 1182 even, is like that's my bullish invalidation. That it needs to stay above that. Do we get all the way down there? It's a strong trade. I don't know if it gets a pullback quite that deep. I'll be looking at 1203, 1200 first on an initial move lower. Now, what we didn't talk about, he says, yeah, I got it. Right on, Theo. What we didn't talk about is the topside breach, which ultimately we're looking for. If we do see the topside breach, guys, look for the the 100-day moving average, 1240. 1241 is the swing low from back here, again, in October. A 50% retracement takes you into this region, which I think is going to be a little bit more critical. That's 1250. But basically, there is a lot of room to stretch if we clear this 1220 level. So gold is at a critical region right now. Absolutely critical. Okay, so that is bullion prices. Any question on that? Number 6. Nat Gas, which is a trade we've been following here for a while now for Mr. Kanwal, looks like this. So Conwal, you're asking me earlier about the levels for nat gas. This is the level I was referring to, near term, that you might find some near term support. 328, is that what I sent you? Yeah. Look, this is a basic 50% retracement of the advance, but it's also the median line. So remember, let me take a step back. Here's the daily chart looks like. Just for anyone who missed the previous coverage of this, we've been covering this trade for a while. Does that do anything? Yeah, not bad. So, long story short, we made an outside day reversal yesterday off of resistance, and that resistance range was 346 into 355, a level we've been talking about for a while. It got messy here into the close of last year. I understand that, and I'm not a big fan of this trade to begin with, but certainly the outside day reversal that we posted off that region adds further conviction near term for a move lower. So we started working with some downside slopes in the webinar yesterday, highlighting some downside targets that have actually continued to pan out pretty well. So I know, Conwal, you were holding that short yesterday. That panned out pretty well. It held below that 50 line. And on the move lower, excuse me, this is the 618 line. Nope, it is the 50 line. And on the move lower, that target at 333 got taken out. We rebounded just off that, okay? And here's the break lower. There's the level I just tweeted at you earlier before the webinar started. 50% of retracement of the advance off the lows is dead on with this median line formation. 1, 2, 3. These are the highs from back December 9th, December 20th, and the subsequent high on December 28th. So watch that region, okay? Could get a little bit of a bounce off that. If this breaks, you're going to continue to favor that downside into 323. Ultimately, you're looking way down here for nat gas. This region here, by the way, is represented by this region here on the daily chart. You have the 100-day moving average. You have a longer-term slope, support, resistance, support, support, break, resistance, should be support. That converges on the 100-day moving average, the 50% retracement, and the swing lows, all at 309 into 311, this region right here. Okay, so for your short position, look to do something here. Maybe take a little off, bring your stops to break even. On a rebound, I'd want to stay bearish on this trade. I'd want to stay bearish sub 338. I'd want to stay bearish below this region. Okay, so let's clean this up a little bit for you, Conwal. Initial resistance, your weekly open comes in at 340, so this region right here should hold if we are moving lower. Okay, I'm not going to leave that on there, but you get the picture. Initial support, downside break targets. Conwal, feel free to take a picture of this if you need it. It's the daily chart. And here's your intraday, 120 minute. 328, initial upcoming target. Is it time to be bullish on crude oil, says Lionel Oliver. Great seeing the room. Let's take a look. Nat gas was number 7. Oil will be number 8. Here's what crude looks like. He says, thank you, sir. Hey, Conwell, my pleasure, man. Lionel, this is what I want to say. I was actually talking to the guys over at Daily FX today with regards to crude. It was David Song was asking me what my opinion was. Look, this is what I want to say. The levels that we've been following here have been really fruitful still. Remember the weekly chart, and that's all I kind of really wanted to stress, was the fact that where we came off of in crude is certainly a level that you guys have heard here on SB for months. Huge. 55 into 54.75. Massive region of resistance. 786 retracement off the decline from the 2015 highs. The 618 extension from the ascent off the 2016 lows, and the upper median line parallel for the operative formation. All converged up here. So heading into the start of the year, we've been looking lower. Put a gun to my head, Lionel? No. I don't think it's time to be bullish yet on crude. On a larger term. Does that mean near term we can't go for another rally into 55? No, we could definitely do that. But I do think you still risk more of a pullback. Keep in mind, going back to just some subtle things, observations we want to take into account. Ongoing divergence in momentum. Price action making a higher high. The oscillator making a lower high. Well, it's not necessarily screaming you got to get bearish right now, but certainly tells you upside momentum might be getting a little tired. This is a weekly chart, okay? Going back to the daily. On this rally into the highs, price action, higher high, higher high. The oscillator holding those highs. Well, looks a little tired. Still looking for a pullback, okay? Last indication for me that has me still looking lower is the fact that yesterday's rally here failed miserably to even test the monthly open. Okay, I was looking for a possible re-entry if we can get to 53.80, but we didn't quite get that high. We turned and slammed lower pretty abruptly against last week's high. So that to me also is a bearish development in near-term price action. Drill down even deeper. Here's what the intraday chart looks like. And I didn't touch anything from yesterday because I wanted to show you guys. Remember how we were talking about this slope and I said, well, I don't even know if I want to still work with this slope. You know, price is kind of probing above. We'll leave it there for now because it could become fruitful. Well, guess what? We failed yesterday, move lower, and now we're turning again ahead of the upper parallel with this break below the weekly opening range, keeping the focus lower as we expected. So false break scenario yesterday, and we didn't make it into the monthly open. As I highlighted, this is an area of interest for short entry. Didn't get up there. Turned ahead, back into the confines of this formation. Still looking lower here on crude. Still looking lower on crude. So again, Lionel, to answer your question, you're asking, is it time to be bullish? If you're talking intraday, like heading into the U.S. trade session, yeah, maybe you get a rebound off this region. I'm sure if we tack on a quick retracement here, you're actually probably coming right off a 786 or something of the sorts. Right there. So yeah, you know, you could get a rebound off it. Is it time to get broadly constructive crude? No. Levels of which I'd be interested in getting broadly constructive crude would be if we get back into 49.50 as an initial level, then we'd start to look for possible stronger support targets. Or if we breach 55, look for the pullback, and then this thing could get back into 70 on such a stretch. But right now, I'm still working with the assumption that you have a little bit more downside to go here in crude before this thing ultimately turns around. Does that make sense? Oh, stop traffic. 100% extension. Wow. So 2 equal legs down from the high. 51.19. Bear with me one sec, guys. Just want to see what this looks like. Near-term targets there for oil. On the move higher, 52.40, 52.50. The weekly open, this pivot in price, near-term support, I really would be looking for basically the extension of the 618 move would be 50.70, and that coincides on that 50 line pretty nicely. All right, so those levels for crude. Lionel, does that make sense on crude? Roth, I mean, I could give you a list. I mean, where do you want to start? He's asking, what's the next influential event coming, OPEC meeting or else? Any good news website to recommend keeping an eye on for oil? I mean, aside from the major headline ones, I mean, I have an oil, a Bloomberg terminal with an oil like news feed. You can find those though if you go to Bloomberg.com, Reuters offers stuff like that as well. Obviously, the OPEC meeting is what all the news headlines are making, but this is one caveat, guys. And again, I hate to bash on anything fundamental because underlying, yes, it moves markets, but this OPEC nonsense has nothing to do with the fact that we called resistance in crude. That price was, at a major key threshold to start the year. I don't necessarily buy that all this OPEC talk is really what's going to be the tradable move here. I think you want to watch the technicals a little bit more importantly, Raf. But look, any news that you get on any of those free sites is going to be consensus, and the market has that knowledge ahead of time. There's nothing I can offer you that's going to give you a heads up. Right? And that's the one thing we always want to keep in mind. I could give you a million places to go look, but guess what? The market's getting that information at the same time. Unless you're getting it first, you're probably already behind the wheel on it if you're trying to trade off it per se. But we will keep you up to date. It says, okay, thanks. Hey, more than welcome, man. Okay. Lionel says, yes, the OPEC news got me thinking too. Thanks, guy. Hey, more than welcome. More than welcome. All right, let's jump into copper. Last one of the commodity block here before we jump into some more currencies. Number 9, here's what copper looks like. Also a trade that we were just chatting about here in the message board before the webinar. So that level I told you about, 261, this is why I was talking about that. You see this confluence here, Kanwal? A 38.2 basic retracement of the advance off the lows they made back in December actually converges on basic lower median line parallel, lower median line support right at that region. And momentum has been flatlining as we continue to press lower lows in price. So I do think, you could see a little bit of a rebound here. If you have a decent profit on that short, an area of interest for sure to start taking some off the table. But with the same respect, Conwall, if it breaks, I think this is going to see some accelerated losses, okay? And in such a scenario, you're looking for 258, you're looking for 259, this region here, swing highs, 50% retracement. And then I don't want to stretch 256. Let me get rid of that for you. This would be the more key region of support. You're looking at that 618 retracement at 255. Bearish invalidation at this point, it's got to be at the swing high I made yesterday. And that converges on the median line right around 266, 265 there. Now, there's no structure to the decline yet, meaning there's no slope. There's nothing that I can work with to give us, again, a little bit more of an indication of what glide, how steep, the severity of the decline. But once we get another swing high, or if we do get the break, I do think we'll have a little bit more to work with. This is the daily chart. Now that bisector is pretty close with that basic trendline resistance we were looking at. So let's keep that here for now. Drop the 50 line. Let's see if that offers any guidance for copper. Okay. All right, we'll revisit this, but those levels I'd keep in mind for now, Conwall. Let me know if you have any other questions here on copper. Possibly see a nice little rebound off this confluence support, but I'd be looking lower, sub 266, 265. Cheers, mate. My pleasure. Okay, that's number 9. Let's jump back into the currencies here. I have a couple of minutes left. I do want to just touch base on dollar yen and Aussie yen. I have your questions on Kiwi CAD and Euro Oz still to go. Here's dollar yen real quick. Dollar yen looks like this. Okay, daily chart. She's ugly, but finally has continued to sort of pan out. It took forever. It was like drawing teeth. It was like pulling teeth trying to get this thing to turn off 118.17 off that 50 line for the upper parallel here. But we finally got the break. Again, we went over this, I think, at length as far as waiting for the closes below support and how we got that back on the 11th here was really the onset of the decline. Yesterday, coming into the 50 line of the current ascending median line formation here, seeing a nice little bounce. In fact, if you bring this into a close basis, doesn't get much closer than that. Okay, so on the upswing here, I guess, is what we're looking for. Where should I be looking for near-term resistance? That's where we go into the near-term charts. So, sort of key resistance for me. I do want to bring down our bearish invalidation level from here. We're going to bring that down to this region here now. You have the weekly open, you have the former lower parallel, and they would necessitate a break above this key region. 114 is an area of which I'd start to look for re-entry on the short side. This is where I want to look for entries. Bearish invalidation is at the weekly open, meaning if we push through this, I think the recovery gets a little bit more significant. You could see a move all the way up into 116. Now, that's not the ideal scenario. That's not what we want, but that's the risk in my eyes if we break through the weekly open. So I'm looking for the upswing here to get back on the short side. I do want to be mindful, again, of that 50 line for that slope. It's really what caught the lows here in overnight trade. Downside targets remain unchanged on a move lower, 111.80 followed by 111.35, 111.40, both areas of interest. The 1618 off the high. This is a 38.2, former swing highs. And then obviously the lower parallel to be sort of your ultimate target on this move here. But dollar yen finally making some moves. Still kind of not really the most exciting trade in my mind, but directional bias is finally starting to clear up a little bit. Here's the hourly looks like. Now the interesting part is if you want to express yen's strength, another trade I am looking for confirmation. I don't think we have it, and I think it's going to fake everyone out first, but Aussie yen. This is what we're talking about, Aussie yen. Pooja, are you in the room? Yeah, I see you. So look, this, oh, might have just missed entry. This was an area of resistance we were looking for yesterday, okay? Here's your weekly open. Here's the upper median line parallel. We kind of just probed right into it right now. Oop. So again, the premise for Aussie yen that we were talking about yesterday was the fact that we held below the median line after breaking late last month. Resistance, resistance, resistance. We gapped lower, filled that gap, and moved back again to close lower on the session. We've now made a full round trip, tested the weekly opening range high again for the week, and that's why, you know, I want to see this hold. 86 is still going to be the broader key level. That's the high or the reversal day close. But ultimately, I'm looking for a move back into slope support. Here's what the intraday looks like. Remember that median line formation we added yesterday, Pooja? It's right there. If this thing is in play, that certainly is a nice start. But we do need to see this start to materialize back on a move lower pretty early in the session here. So I think you'll know pretty quick if you're wrong. It says just got short 85.61. Oh, right on. Right on. Yeah, your stop is pretty tight then, I'm assuming. And guess what? We'll know pretty quick if we're wrong. I'm with you on that. Because this is sort of initial area right here. On even a nearer term move, so if you want to get fancy with it, boom. All right. So let's see. If it plows through 86.08, I want no part of it. You're probably going to see a little bit more of a dramatic rally, but I do like this thing, the idea of this holding here for resistance. Is there any divergence on Aussie dollar on the weekly and 4-hour chart, says Theo? Aussie dollar on the 4-hour. Yes, there is. That's weak divergence, though. I think we talked about this yesterday, or it might not have been this pair, but remember the one thing I want to note, Theo, is these divergences above 70 or below 30 in the extremes tend to be pretty weak signals. I don't want to dismiss them all. I don't want to just broadly dismiss them, but they tend to be your weakest signals. And one other thing that we never talk about with divergence is it never actually gives you a tip on time. Divergence is a very important factor to recognize when market momentum is waning, but by no means has any type of time bearing. Something can stay in divergence for an indefinite time period, right? So it's important to recognize when you're seeing it, the triggers, and watching intraday price action, something much closer will be when you actually want to actually use it for an actionable trade. I completely agree with you, though. You're definitely getting divergence here. The only problem is this can continue to go for another day or so before it actually turns. So on the 4-hour, I'm with you on that. On the weekly, whoops. No, I wouldn't say there's any divergence here necessarily on the weekly. Pretty equal lows in price. Yeah, I wouldn't necessarily say there's much on the weekly. Aussie dollar divergence on entry every time frame, but no triggers. On nearly every time frame, but no triggers. Yeah, that's the problem, right? I told you guys yesterday, I got stopped out of this short, so I'm not going to be too stubborn and try to continue to fight this rally. Here's the thing with Aussie. Did we talk about? We talked about it earlier. Actually, we didn't. Here's the thing with Aussie. I think there's a reason I was avoid talking about it, just because I got a little frustrated with what it's doing here. Look, for Aussie guys, I got nothing. If it gets into the upper median line parallel, I'll be looking for resistance. If it gets back below 75.40, I'd be looking for a rally back into that region to hold as resistance for a move lower. That's my only play on this. Right here, right now, I don't have anything. Maybe if we had some slope to the ascent, a little bit more guidance, I'd be having a little bit more of a better idea of where we'd be looking for resistance. But right now, it's either a move into slope resistance near 76 or a break and retest of 75.40 as resistance to move lower. I don't really want to do anything here. I can't advocate chasing, fresh two-month highs here. Yeah, there's not much to work with, in my humble opinion. Again, this could materialize into something could be a median line formation in play. That would give us the upper parallel basically here. Here's your 120-minute. Here's your 1 hour. See, now this would be a stronger divergence signal. Graham and Theo, both of you looking at this. Both of these would be a stronger divergence signal in my humble opinion. So as you get into the tighter time frames, it does look like it's starting to get tired. Whoops. Here's your 30-minute. And then when you get into the 30, you can see that momentum starts to hold 40 support, 60 resistance. It's going to range bound here for a little bit. I wouldn't be too surprised to see one last spike and then a reversal. Hopefully we can get a tag of that 76 level, that upper parallel that we talked about in the daily chart. I think that's your best bet, is trying to get trying to fight this rally. Otherwise, guys, you're just trying to call a high, and I'm not going to be able to get too excited about that. Roth, you're absolutely correct. Keep in mind you do have some Aussie data on tap later tonight. Here's what Aussie figures are supposed to look like. Consumer inflation expectation, wouldn't spend too much time on that. More importantly, it's going to be the employment change. That's expected to come in at 10,000. Slight off print from the 39,000 strong read we got last month, but always with the Aussie employment data, guys, always keep in mind the full and part-time breakdown. This is really where we typically see a disparity. If we get strong employment change, but they come by mostly part-time employment, that's going to be a negative, broadly speaking. Last month, obviously, we got a really strong read. Most of the gains came by way of full-time employment, so keep that in mind. That's at 1930 here in the United States tonight. Okay, so we covered Aussie dollar. That was number 10. I'm over on time, so let me just take a quick look at Kiwi CAD and Euro Aussie. I promised I was going to do so. Kiwi CAD looks like this. I haven't looked at this in weeks, but I can tell you right off the bat we're at resistance. Resistance on tap. Key level that we've been playing with all throughout last year, you're basically looking at 94.33 into 94.23. It's a 38.2 retracement we're checking the underbelly of right now. This is of the entire 2016 range, but also the 2016 open. So something I'll be looking at for near-term resistance here on Kiwi CAD for sure. Now on the pullback, that's CAD strength, and that's Kiwi weakness. Kiwi dollar, I do think, in my humble opinion, again, very similar to what we're looking at with the Aussie. I'm looking for one last stretch high to ability, maybe get a tag of that former trendline support to short Kiwi dollar. So for Kiwi CAD, I think you might get a little bit more sideways action here before you actually start to make a move. Keep in mind, you are at resistance anyway, slice it, in my humble opinion. Does that slope come into? Well, you got a clear-cut target on a topside breach. You're looking at that 100-day moving average, 94.80 if you do breach. And a support break below 93.35 would be required to mark continuation of the broader downtrend. Okay, not a bad setup. See if I can't play with some of these levels, maybe get you a better picture of what's happening on the near-term time frame. And near-term support. All right, so hope that helps on Kiwi CAD. Very interesting pair. The other one you wanted to look at was Euro Aus, and that one we've been following. Hey, Juan says thanks, much appreciated. Hey, no worries, man. You're in the right place. Kiwi CAD, Euro Aus is the one I think we're a little bit clear on because we've been following this one already. So again, quick reminder, a break of a multi-year trend line late last year, saw a test of resistance again into the December. Huge reversal. Break below 143.20 put us firmly on the short side. Now the decline came into the low day close that you made back here in December. That was 141.48, and we were sitting there all for basically the opening range of this week, and last week's low was just a hair above that. We're trying to make a break here. Watch today's close, okay? The only problem I have here is I think Euro and Aussie are both kind of doing their own similar thing, which is keeping this lateral to lower. I do like it lower if we push below 141.43 or 34, excuse me, today. Ultimately, I'm looking for 140.75, and that would be two basic legs off the high and the exact swing low from back in November. So big region to 140.75. Last year's low, and also don't forget the 50% retracement, long standing off the lows from 2012, comes in at 140.95. So looking lower, while below this basic channel resistance, required a break above 42.26 to get bullish again here on Euro Aus. So maybe again, kind of working with the pairs that we just talked about on a move lower or a move one stretch higher in Aussie, giving this a move lower here into key support, maybe a little bit more of a rebound off that level. But the initial focus, current operative focus, stays weighted to the downside. Okay. Also a pair to watch tonight on the Aussie data release as that comes out. Guys, I have to go. I think I got through everything except dollar ZAR, and I will take a look at that chart for you to see if we can't figure something out there. Don't forget, guys, Jamie is up on tap later today with midweek strategy webinar. Till then, best of luck trading, and I will see you guys tomorrow morning. Again, don't forget, BOC on tap in just under half an hour. Cheers, guys.